Welcome to Smart Stock Watch. Today is September 10th, 2025, and we're diving into the first quarter earnings report for fiscal year 2026 from Kewaunee Scientific. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kewaunee Scientific has shown some impressive numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Kewaunee Scientific reported sales of $71.1 million for the first quarter, a significant increase of 46.9% compared to last year. John, what drove this growth?
The growth was primarily driven by strong performance in both the domestic and international segments. Domestic sales increased by 53%, largely due to the incorporation of New Air's results and improved productivity. International sales also saw a 30.2% rise, thanks to decreased customer site delays and increased deliveries.
And how about profitability?
Net earnings rose to $3.1 million, a 41.1% increase from the previous year. The diluted earnings per share also improved to 14 from 74 cents. This was supported by a robust EBIT of $6.32 million, reflecting effective cost management and operational efficiencies.
Segment performance and strategic investments. John, can you elaborate on the segment performance and the strategic investments Kewaunee is making?
Absolutely. The domestic segment saw a significant boost in sales and earnings, driven by steady manufacturing volumes and cost management. The international segment also performed well, with increased deliveries and billings. However, the corporate segment reported a pre-tax net loss of $3.6 million, which is attributed to strategic investments in compliance, people, processes, and technology to support future growth.
How do these investments impact the company's outlook?
While these investments may pressure earnings growth in the short term, they are expected to position Kewaunee for rapid and sustained growth in the future. The company is focused on both organic and inorganic growth, which should leverage these investments over the long term.
Financial position and debt management. Let's talk about Kewaunee's financial position. How is the company managing its cash and debt?
Kewaunee has a solid cash position with $20.4 million on hand and working capital of $66.7 million. The debt-to-equity ratio has improved to 0.94 to 1, indicating effective debt management. The long-term debt stands at $60.3 million, with a significant portion related to a sale-leaseback transaction. Overall, the company is maintaining a healthy balance sheet.
What does this mean for investors?
For investors, this financial stability suggests that Kewaunee is well-positioned to support its growth initiatives and manage any potential market volatility. The improved debt metrics also provide confidence in the company's ability to meet its financial obligations.
CEO's insights and future outlook. John, what insights did CEO Thomas D. Hull III share about the company's future?
CEO Thomas D. Hull III highlighted the solid performance of the domestic and international segments despite challenging market conditions. He noted that while the order backlog remains high, there is expected volatility in project delivery timelines, which may cause uneven performance in the coming quarters. However, the focus remains on growth and strategic investments to support long-term success.
How should investors interpret this outlook?
Investors should be prepared for some short-term fluctuations, but can remain optimistic about Kewaunee's long-term growth prospects. The company's commitment to strategic investments and its strong backlog position it well for future success.